Hello, hello, and welcome to another wonderful winning Wednesday. I hope it is as warm for you wherever you are as it is for me over here in what used to be or what could have been a wonderful winning Wednesday. I was expecting that the temperature would be a lot warmer than what it is right now, but hey, if I look at my phone, it's 58 degrees over here in Northern Virginia, and it's drizzling just the same. I don't know for you, but when it's drizzling, it's just a little bit colder than what it usually is for me. Um, this week, we were going to have a conversation about basically business credit because I am having a lot of different conversations. Last week, I actually did my BNI keynote where I just wanted to reinforce the real reasons why we want to go on with business credit, right? Because, yeah, credit is available to us in many different forms, fashions, shapes, sizes, etc. But there are some specific key reasons why we want to move forward and why we want to move forward with business credit from a business perspective. And the last time I was having this conversation, one of the things that I said to myself is that business credit is there so that with what happened to the Titanic doesn't happen to you in your business. I remember I was watching a documentary on the Titanic. And of course, in when I watched the movie, we had already known that the Titanic did not survive its maiden voyage. However, the Titanic was built to be a ship that was unsinkable. Let that sink in for just a quick minute. The Titanic was supposed to be a ship that was unsinkable, and in hindsight, we know that it sank on its maiden voyage. I connect the dots of that by saying that as a business owner and entrepreneur, we believe in our idea and we believe that our idea is impenetrable, it's foolproof. We've done the hard work of knowing who our customers are. We've done the hard work of knowing what the capital is going to be needed in order to have our business not only survive but to thrive. However, life will be life, and my friend and BNI chapter president Glendon basically stated that the other day, life will be lifing, right? And regardless of whatever plan that you put out, life will basically disrupt or interrupt your plan, regardless of how foolproof it is. And that's one of the reasons why we always advocate action over inaction. But I bring that to you to say, from a business perspective, is we need to have a firm separation between the business and what happens on the personal side. The real reason is if the business should fail, and if you look at the statistics, it tells you that between 50 and sometimes 90% is the number, but we'll use 50 for today's purposes. 50% of businesses do not survive to their fifth anniversary, right? If that business may not survive past its fifth anniversary, what can you do to mitigate the risk to your personal finances should that happen? I remember when I graduated high school and I was working at a law firm, I met this gentleman who was an IBM technician, and he was Jamaican and he had started a restaurant. And I didn't know anything about business at that point in time, but he told me that he had consumed, well, built up so much debt on his for his business on his personal side that now he was struggling to survive because the business didn't work out and he had to pay back all of that debt. So that's the first thing. Debt to income ratio, the acronym that many people use is DTI, right? And the higher your debt to income ratio is, right? The higher your debt to income ratio is, the more risk is involved in basically loaning you any money, right? Because that debt has to be paid somehow. So now, if you have a high debt to income ratio, what happens when you are looking to move and buy a new house or purchase a new vehicle that you're going to have debt on it? Now you are going to be at an elevated interest rate for whatever debt you assume because your DTI is now high, which increases the risk that you are encountering. But you've done all of this in order to start up your business. Right? Now, I do not disagree that when the business doesn't have revenue coming in, there is an opportunity to use your personal resources in order to help the business get started. And that can happen with many ways. We've all bootstrapped our businesses to give it the seed funding that it needed to be able to start. But over time, the dependency that the business has on the business owner should slowly but surely get smaller and smaller and smaller and smaller to the point where the business can now stand on its own 2 feet all by itself without its business owner having to be involved in the financing, right? So, one of the things that is critical is being able to establish your corporate credit report. And your corporate credit report doesn't start when you get your EIN number, it really starts when you get your DUNS number, which I say is between steps 3 and 4 in establishing your corporate or business credit profile. Between steps 3 and 4, because after you have established your DUNS number, which typically it's free, of course, right? But you apply for that on the Dun and Bradstreet website. Once you have applied for that, the next thing you have to do is you have to work with vendors. Now, all vendors aren't equal, right? All vendors aren't equal, right? You have to work with vendors who are actually going to be reporting to the credit reporting agencies your experiences, right? It makes no sense to be a good steward of your business finances if you're going to work with vendors who aren't going to be reporting your transactions with them. And that's one of the things that the platform that VIP Business Credit supports. We ensure that the vendors that we are recommending are also reporting to the credit reporting agencies at the same time. So I know I was a little bit late, right? But today's message is really going to be a message of why you should separate your personal finances from your business finances. And I can find no stronger reason for doing so than the fact that the business, although it is not infallible, it can not it can be in a position where it doesn't survive past its fifth year or its third year, for that point, to be honest with you. And should that happen, you would want to be able to segment or segregate one from the other. I see no stronger reason why you want to have that focus. And we reiterate the fact that in the beginning, only in the beginning, right? And I would say the beginning is going to be the first 1 or 2 years. It's okay to provide a personal guarantee for your business, right? It's okay. But over that time, you need to rely less and less and less and less on your having to supply a personal guarantee for your business, because at that point in time, if you get to year two, three, four, five, the business should be bringing in enough revenues, right? That financing sources are willing to give a line of credit, a loan, cash credit, etc., to the business. I'm going to be short and sweet and be in and out today. I hope that this message communicated well to you. We are going to be doing things just a little bit differently as we move forward, right? We're going to have more planning. So, probably by Monday or Tuesday, you know what the topic is going to be for the Wednesday session. But until then, I want you to keep well. I want you to keep pushing, right? I want you to always look for Wednesdays to be a wonderful winning Wednesdays. My last quote was that we can't control what's going on all around us. There's a whole lot of information that's going on around us that we are not able to control. The one thing that we are able to control is how we respond to what's going on around us. That is the one thing that you are in control of, is your response to the environment and the stimuli. So you could either have a positive response or a negative response. At the end of the day, I would say to you, choose positive. So I'm going to be out. It's Lee Johnson with VIP Business Credit, hoping that you have a wonderful winning Wednesday. Take care, and we'll see you again.